What a start to the week with some of the small cap stocks that everyone's been following over the past few months. Big early gains on BNGO and NIO today. In today's video, I'm going to talk about what's happening with these stocks and why you should remain a little bit fearful and protect yourself. I will also talk about the large cap Eli Lilly and their big announcement that has their stock up over 10% this morning. And then I'll make a quick introduction about a new series of videos I'm working on about how I'm building my $1 million retirement portfolio. Now, a couple things before we begin. Please hit the subscribe button, and if you do end up enjoying this video, please give it a like, as every little bit helps. Second, I'm not a financial advisor, and what I'm discussing are just my opinions. There's no guarantees of success. Always seek a professional before investing. Hello, you wonderful people out there. My name is Chris, and welcome to the Business Report Show. Great morning for investors of a few small cap stocks that have been trending in recent months. NIO was up 10% in pre-market trading and has pulled back slightly, but is still up 8% as of recording of this video. Now, it's been buoyed by the successful NIO Day that met the hype leading up to the event, and definitely a lot of positive news painting a rosy picture of the future of the stock. It was actually quite interesting to see Jim Cramer on CNBC talk about the NIO stock this morning, clearly indicating that the uptake in share price was purely driven by younger investors who see the future in owning electric vehicles. Cramer said clearly NIO is the next Tesla. What was also interesting was that he called out some of the big analysts who gave Exxon a buy rating this morning to some applause in the background. He can't understand why some of these analysts are so out of sync with the market when it comes to EV demand for the next generation of buyers, and yet they're touting oil stocks. Now, while I'm all for EVs in the future, and for those of you who watch my previous videos, you know I'm long Tesla, I think there are still some fundamentals around the carbon industry that you can't ignore for the next 2 to 3 years. But I do think it may be the start of the end for pure oil plays. But I also think they have a big part in driving both capital and current technologies to the future of energy. Now, BNGO was up anywhere from 15 to 20% in pre-market trading, and as recording of this video, it has pulled back slightly to about 18%. I've made a couple of videos over the weeks about the initial tumble on BNGO, but provided some thoughts on the stock. I will reiterate right now that BNGO is purely trading on news and nothing else, even when you factor in the preliminary quarterly financial announcement they made on the weekend that revenues were expected to increase up to 50%. A little clever, I will say, in using the language, as most people will focus on the 50% and not the up to. You know, kind of like retail discount stores, you see touting the largest discount, which may not be indicative of the most products they're offering in the store. Nonetheless, not crapping on BNGO here, so don't get mad at me. I just want to paint a picture without all the noise. BNGO's operating income is still at a massive deficit every quarter, and it's not because of research and development. R&D spending has remained consistent throughout the last 5 quarters at BNGO, but G&A, the general and administrative costs, has gone from $6 million to over $10.9 million. So they are spending a lot on marketing, a lot on sales, which is why we're seeing more news and more events related to BNGO. Now, you do have to spend money to make money, and companies do need to spend a good chunk on marketing and sales to actually generate revenue, so I'm not faulting them there. But that jump in G&A expense will need a significant amount of revenue over the next few quarters just to break even on their quarterly sales and marketing investment. Can they do that? I don't see why they can't if they're able to maintain that 50% growth in revenue over the next 2 or 3 quarters. I don't work for BNGO's sales team, so I can't tell you if that's a realistic target or not. Now, the next thing is their recent share offering. Why are they only pricing the shares at $3.05 per share when clearly the shares are trading a little higher? Now, having worked in the private capital industry, this is purely driven by the investment banker, and in this case, it's Oppenheimer & Co. The reason why you would want to price the shares at this amount is to raise capital as fast as you can. Remember, Oppenheimer and their private clients are the only ones who can access these shares at $3.05. Now, when I was looking at the SEC filing, there's also one more detail. Oppenheimer has actually purchased all the shares initially at $2.87 per share, and they're actually selling the shares to their clients for $3.05. What client wouldn't want to get in on BNGO at $3.05 when after the closing tomorrow, their shares are immediately worth $5.50 and you have the liquidity of the public markets? Not a bad one-day return on this investment at $3.05. Now, I'm sounding super negative on BNGO right now, but I started this channel because one of my missions is to increase financial literacy and through this hopefully help people make more informed investing decisions, because I do truly believe in using stocks to generate long-term wealth. I just wanted to take this opportunity to make sure investors are looking at some of the underlying reasons on these moves. So if you are trading BNGO, you need to protect yourself, as behavioral investing theories will tell you some of these investors who got in at 305 probably going to liquidate some of their shares soon to take immediate profit. Looking at these capital raises will also tell you that without these raises, BNGO can't keep the lights on. Don't forget, in Q3 of 2020, they raised 35 million. Q2 of 2020, 20 million. I'm not too worried about share dilution right now on these raises, considering their market cap has increased to 805 million recently, and these raises represent 3 to 5% of that valuation. But overall, their sales need to go up by more than their recent quarter's 50% in order for them to gain momentum in turning their balance sheet around. The other thing investors should keep an eye out is on their debt levels, which is manageable right now. They don't have a lot of debt, so it's not a big concern. But do remember, debt holders come first before common shareholders. So if BNGO runs into any issues making their debt payments, and if the debtor calls their debt, know that debt holders will have the power to liquidate and restructure BNGO. And at that point, it doesn't matter how much we're pumping up the common stock to investors, the debtors will have last say. So to protect yourself on BNGO, make sure you're setting up your stop losses or trailing stop losses. This will protect you in case the stock drops below a certain price or a certain percentage level below the trading price. I recommend you read up more on stop losses and how best to use them. I will say in my early penny trading days, stop losses were my savior in not losing my entire portfolio. Now, lastly, I want to quickly mention Eli Lilly, a large cap stock that has been on my radar as potentially adding to my value investing side of my portfolio. Eli Lilly today announced that phase 2 trial of their donanemab Alzheimer drug showed it slowed about a third the rate of decline in a combined measure of cognition and function in early stage victims of this disease. Alzheimer's disease is an irreversible brain disorder that slowly destroys memory and thinking skills and eventually the ability to carry out even the simplest tasks. The majority of people who suffer from Alzheimer's are in their mid-60s. Eli stock is up 11% in current trading as of the recording of this video. And I mention Eli Lilly here as more of a comparison to the small cap pharmaceuticals that we are looking at right now, so you can really understand the process of the industry and how the financials can play out. Eli Lilly is a massive company with $178 billion in market cap. The revenues last year was around $23 billion and their net margins around 24%, giving them a positive net income of about 8.3 at the end of the day. Their drug is in phase 2 and is only midway through this approximate 18-month second phase trial. There's still 2 more phases to go before this specific drug, even if it does make it through, is available for FDA review. So as you can see, many of these small caps that are trading super high still have a significant way to go before getting anywhere close to being sustainable. So again, let me reiterate, I'm not saying you should avoid these high flyers. I'm just saying trade them tight and don't get married to them emotionally. Before I end this video, I just want to thank all my current subscribers, the 180 or so at this point. I do truly appreciate the support. I thank you for hitting that button. As mentioned earlier, my mission for starting BRS is to increase financial literacy for all, because I think investing is important and knowledge is power. So the more insights I can share, hopefully the better you can invest. I'm working on a series of videos to share my strategy on how I'm building my $1 million portfolio for retirement. And it's based on one of my most favorite investing books, The $1 Million Portfolio by the Motley Fool, How to Build and Grow a Panic-Proof Investment Portfolio. I've used this strategy since the early 2000s as I exited the all-in small cap type of investing strategy. And I have to say, it's been a much happier and less stressful building of my portfolio ever since. So for those who haven't subscribed yet, make sure you hit that subscribe button so you can get notified once these videos come out. All right, that's it for me today. Remember, always be learning and always be investing. I'll catch you next time.